Hello and welcome to our chart review for the week. This is the stocks and indices. So, been a very interesting week, I would say. Not expecting the pullback that it had. As you see with all the red lines that are on my chart, the last time I said is I was expecting all these lines to be broken. Or closed, I should say, before we started seeing any kind of a pullback. But it kind of happened sooner than expected. So the only thing I can say with this is from the low to that retraced high, if you can see right here, it hit off a 618. But not only once, like it was sitting at the 618 for about a week before it pulled up. Okay, now do I think that this is going to keep climbing? Not so much, because overall this is very strong shift going down, right? All the EMAs are kind of starting to go sideways and drop, all the larger ones anyway. Okay, and on the short term, even just going from this fib to, or from that high to that low, we're already at that 50%. Going up maybe another 130 points would be the max. Honestly, I cannot see this climbing and closing off any gaps, let alone making a new high. That's just, that's hard to see right now. You know, 130 point for a climb will probably be the highest. So right off that EMA, actually right around this area, I'd be expecting a drop. Okay, we'll see if that actually happens. Maybe it'll break right through. I don't see that's likely. It's still it's dropping lower than what it did before, so that is still very valid. You know, the climb is pretty much over, right? Like it made a newer low past that one, so it is on a reversal. And this will be the telltale sign. If it breaks through this, then this kind of gap would be the next target and whatnot. But I can't see it going that high, folks. Like it's on its way down for the next few months. So yeah, as far as the close, what happened overall this week, let me just zoom in on the chart to give you a better example. So originally when it was dropping here, you could see the gaps have been closing almost every day. It closed this one off as well. This one was red, and this is where I was expecting all three of them, right? Well, it was going to be a little of a pullback, but I was expecting all three of them to be shut down. And that did not happen. So I'm surprised, but regardless of that matter, this one is now an imbalance, or not an imbalance, a gap that was formed on NASDAQ. So, you know, what is it, 86% chance it's going to close within the next 4 days, because we already had one, right? And yeah, so that's kind of what I'm expecting. Just a nice big drop. You know, if we hit this area right here up to the 1700s or 700s, so be it. You know, I don't think we're going to be going much higher than that. Now, these really strong 987 and 6110 or 610 EMAs are going to be used as a liquid resistance. So as you can see, it's kind of bouncing off them in the last few hours of NASDAQ trading, right? So you can see that happen. Wicked off, wick through both of them and off, and now we're just kind of sitting there. Okay, so let's see on the triple Q if we have any new developments. Not really. Okay, still very valid, 618 there. It's not retracing as deep as the other ones, right? It's staying quite light. So as an example, it's almost exactly like NASDAQ. It's at that 50% now. Could potentially go up another, what, $2.7, 2.7 points, however QQQ is measured. You know, liquid resistance lines right there. I can't see this going much higher. I believe maybe on a Monday we might have a bit of a climb, but you know, by Monday or Tuesday, even Monday, we just wick off it and start dropping. It all depends on how Sunday is, right? Pre-market for NASDAQ can last, this is what, I think 18, 15, 16, I think 16 hours before markets actually open, right? 3 p.m., I don't know, 17? I can't remember. I think it's 16 or 17, something like that. It goes from 3 p.m. my time to 7:30 a.m. my time. So that would be what? 12? My God, why is it so hard for me to do simple math tonight? Holy. Doesn't matter. Whatever. Okay? More or less, it's runs after hours a lot longer than it does during the market. Okay? So that's the Qs. And I was asked to do MES, so let's take a look at this one. All right? Again, short term, you can see it's not even at that 50%. The only thing that I can see here is this institutional play, right? So quite possibly taking a trade off that area would be ideal, right? With about 1.5%, so 62-point stop loss from that candle pattern, that would be pretty good. If it even makes it up that high, you know, it's quite possible that it'll just be this candle as an imbalance, not the institutional play, because this is a very large candle that was formed. So, you know, maybe the trade-off there, maybe the stop loss a little bit deeper for 2.5%, you know, or 100 points. But either way, somewhere around that area should be the threshold of this pullback. Okay, and yeah, you know, I mean, it's similar to this where, you know, thought it could have dropped a little bit lower, then had a consolidation for 2 weeks before it dropped. You know, we might see the same thing. Maybe it'll just go sideways. I don't think that's the case. There's really nothing holding it there. You know, this volume already played out. This volume here played out here. Nothing's really holding it there, just to where we had the previous lows. All right, and if we want to take a look at any of the stocks to see how they've been playing out as well, right? Apple hasn't been pulling back as hard as the actual index, so that's a little bit surprising, right? You see that it's barely at the 328. So that didn't really go as planned. However, Tesla is very deep on its pullback, right? So the last high that it made there, now to the low, right? It's already past at 618. It's possible that it'll hit that 786. But again, it formed a gap on the way up. This is kind of textbook that we're going to see a pretty good reversal, right? You saw the gap that formed right here. 5 days later, excuse me, 5 days later it was closed. Right now my targets are, this is even on the daily. Let's take a look at the 1 hour. It's probably even stronger. So I'll just delete that fib for now. So there's a gap right here. I'll draw them up with the empty boxes. Gap right there. That needs to close. And one slightly below it too. I'll just do a quick copy and paste right there. Okay, so very likely both these gaps will be closed in 1 day. So that's going to be pretty painful. I'm not saying a specific day. I'm just saying that once this starts going down, it's very likely that, you know, it could drop anywhere from 265 all the way down to 248 within 1 day, depending on how hard of a sell-off we're going to see, right? But as an example, it does happen, right? Take this candle for an examples, $24 after the split, right? So pretty significant. Here's another, right? The entire move, $24, right? So every time we see almost non-movement, On the hourly candles, you get a huge drop like that. Like, look at this move back in February, right? I mean, technically it dropped after hours and then it climbed $19. Okay, that was way back in February. So, and then right here in July, let's see how big this one was, right? $12. But yeah, you definitely see that the 24 bucks is definitely possible, right? From bottom to top of this one, it's only 15, right? So not too, what's the word I'm looking for? Not too out of reach, not too far-fetched, right? Let's see how some other ones have been playing around. To jump in on some sells would be really nice for the next few months. Bed Bath & Beyond, you know, just showing you this, what happened, kind of textbook move right there, off the daily to kind of give you an example of what happened, right, from its previous spike. And now you saw the 618 play out beautifully right there. Yeah, so I was under the impression it was going to be off of this area, but it just made a double top, right? But the double top is a 618 retracement off the high there. So whatever moves Bed Bath & Beyond has now, it'll take a while before it reaches anywhere in that area, maybe around the 22 range. Let's see, for example, if we draw it up and potentially that's the low, you know, $21, maybe $22.50 to close off this gap could be seen. But yeah, this is one of the stocks that's going to be disappearing, I would say, in a few years. Bed Bath & Beyond is not kind of my go-to place for anything Bed Bath & Beyond, to be honest. AMC. So my fibs on AMC are still valid, but it's a little strange because I remember this being at $72, now it's $44, and it didn't have any splits, so I don't understand what happened with this stock. No freaking clue, right? It still showed it played off exactly as predicted, right? Before I was saying that was the $25, $26 range, but now it's 16. I don't know. No idea. Spots are the same, the prices are just different. Let's take a look at Costco. This might be an interesting one as well to take a look at. So what I've seen long term, right, that was the rejection and the pullback. So this is where we could be seeing, so I'll take the large one off. So you can see the pullback just missed that 786 and now it's started to slowly drop and having a little movement in between, right? This also has a very strong chance, right? It's at the 618 right now. This has a very strong chance to drop hard. Maybe not as hard as all the way back in May, but you know, Costco is one of the more resilient stocks. Everybody shops at Costco. If you haven't watched Idiocracy, you know, we might have Costco University coming up in the next 50 years. Who knows? Okay, but as far as Costco itself is concerned, it is a lot more resilient than a lot of other stocks, right? Even just the drop has only been 9% compared to, let's put NASDAQ back on the daily to see what that looked like. I know it's not off the NASDAQ, but it does have other stocks in here. So from the high to the low, this was 13%, right? So Costco dropped 9, not a big a deal. But now let's see the US 30, which is the Dow Jones. That's what Costco plays off of. So from that high to that low, you know, we've seen 9.7% drop. So almost the exact same as Costco, actually. So yeah, that's a very big mover in this particular case. So, all right, where are we headed now, you ask? Let's jump back in on that. Don't want to lose my spots. Okay. Any other stocks of interest? Let's take a look. You know, all the meme stocks are going. DocuSign, not really a meme stock, but going up 10% in one day was a little bit surprising. I was actually, it dropped all the way to $53. Like, this is kind of the zone where I wanted to purchase some shares, right? That's where I drew it from. That's the gap that needs to be filled. I could see it still going all the way down to 47. Once it hits that area, I am personally going to be picking up quite a bit of shares of DocuSign. I can see this climbing back up. Same with Carnival. Like I've mentioned already, I'm a little biased for Carnival. But it's sitting around a consolidated zone right now. I don't really find much value in going, between $9 to $10. It is maybe 10-12%. It's still pretty good as far as the movement goes, but I'm going to be able to grab this a little bit lower. I'm expecting further drops in everything, including Carnival. Right, but they've pulled up a lot higher since compared to the rest of them since the drop in August. Okay, so I would say if it gets back down anywhere in the $8 range, I'm going to snag it up. I don't expect them to be sitting around there forever. And yeah, that's all I can really see as far as stocks go. Maybe, what's a good one? Let's see Netflix, how that's doing. It's just consolidated zone, not really of interest. Earnings helped bring it up, but yeah, they do have a lot of potential, right? But as you can see, the lows that we dropped to around the 160 mark, and it rejected off that aqua, but it definitely popped up higher since it was on August 26, right? It almost came back to that same range after those drops. So yeah, I mean, maybe it's more resilient than it was before, but either way, I'll be looking around that 170 mark to be able to snag up more shares. Other than that, I am not bullish at all. I'm going to be bearish until that next leg of NASDAQ, until we hit those 4 digits, maybe low 5 digits around that 10,000-ish mark before looking for any long-term swings. And that'll be a nice bottom to catch before we get, that 2-year-long reversal potentially into a very, very long bull run. All right, and what would that entail as well? Hitting the bottom next year. What happens in 2023? We get to find out who's going to be the presidential candidates for the Republican Party, and about a year of campaigning. So that's when we're going to be able to see a lot of movement in the stock market based on all of that. All right, so thanks for tuning in, guys, and I'll see you next week.